Oil back above $100 a barrel. Stock market showing signs of life. Is the bull market back? And what comes next with these peace talks? Let's get into it. Okay, Clifford, the 25-year trader, back with another Monday morning futures market open. So just wanted to go over what we see here in the market this morning. Brand new week, new trading opportunities, right? So let's start first with what's coming up this week. Here we go, back to Forex Factory. Monday, not much going on. Tuesday, we do got the PPI. This is the manufacturing report. Depending on how the numbers come out, it could definitely affect the U.S. dollar. What else we got this week? It looks like a quiet week actually. We got the Australian employment rate, unemployment report for Australia. If you're a Forex trader trading the Australian dollar, you definitely want to watch that. GDP for the British pound, and towards the end of the week, unemployment claims, a couple Fed speakers. So not a whole lot going on this week, although I did read there's some earnings coming up this week, like some of the banks and some of the other stock market earnings. So that should be definitely something to also check out, your earnings reports if you're trading the stock market. But me, as a futures trader, I'm looking mostly at the index here, the S&P 500. And let's take a look at that positioning from last week, see what happened on Friday. This is the Commitment of Traders report released every Friday after market close at 4 p.m. So let's take a look. We had them short back in February, 195,000 contracts, but as we see, they're closing those short positions. Are we about to flip to long? I don't know, because in the stock market, a very common theme I've noticed is usually they stay short through these bull markets. I believe it has to do maybe with protecting themselves, the hedge funds. Not exactly sure why they stay short while the market's going up, but that is how it is. And usually you want to go the opposite direction. So if they're short, you kind of want to be long. But right now they're not really that short. So, that's what I'm watching. But the fact that if they reload shorts, then that means probably we're entering the bullish market again. But we'll just have to wait and see what happens because usually, like I said, on the bottoming, see, look at that bottom back in April, they were short. Well, and see, they got more short as the market went higher and higher and higher. They kept getting more short. And now here we had some pullbacks, but we'll just have to wait and see. The NASDAQ, however, is a little different. They're kind of long the NASDAQ. So again, I mean this report, Commitment of Traders, you kind of want to use it as a contrarian report. They're starting to get a little short the Russell here. But in my opinion, you don't just want to go by the report, you also want to see what the market's doing. And in this case, the market is showing, it's trying to find support here. We are now in seasonally a bullish time with earnings coming April, May, and all that. So I see like last week it tried to form a support level here, 67.89. Today it dropped a little bit below there, but now it's trying to form support again at 67.66. So I think at the moment this level is probably going to hold, but we'll just have to wait and see. Of course, nothing's, guaranteed in trading, but it seems like this is a good level to buy in if you're going to go long the S&P 500 and use a risk management stop, of course. The same thing on the NASDAQ. I think that this level right here is probably support zone at the moment. And then same thing on the Russell, this new one that just formed here looks pretty solid at the moment. But again, we'll just have to wait and see. But yeah, I think that going long at the support level here, if we do get another pullback, looks like a decent place to go long if you're going to try and get long here. Of course, the best place to go long would be if like we get a huge correction, But to get a correction all the way back here, I don't think that's going to happen now that the market's already pushing forward harder on this support level here at 67.60. So, just keep an eye on that, of course. But all right, what else we got? So, oh, and then the VIX. Don't forget the VIX. VIX coming down. Positive signs that the stock market might move higher. So I think we're back in a bullish zone at the moment. As far as the, the other stuff goes with the war, I mean, they haven't. They said that they rejected the peace talks or something, but in reality, I mean, if they're doing peace talks, then they're probably going to try and negotiate again, and eventually, I imagine they'll come to some kind of an agreement. But let's see how it looks on the report here. So crude oil last week they were really long at 225,000 contracts. They started to close a few longs last Friday at 192,000. So, it's still bullish, but it's starting to become bearish. And as long as these peace talks continue to happen, I think you'll start to see them cut down back to neutral, back to the 0 point, in the future. Because, I mean, if oil's in a supply glut, statistically, they're saying that it's actually a supply glut, then again, the only reason that all this demand is hitting the market is because of this tension in the strait or whatever. So I'll be watching this Friday here, see if they close some of these long positions, and see if we're getting the oil market to top out. The signs that the stock market is moving higher is another sign that probably oil is starting to get more of a top building here. Looking at the metals, gold, they were long here in January. They're still long. They closed a few longs here though, like 250,000 long to 161,000. So I mean, yep, I'd say we're still definitely bullish gold long term. Silver, what else we got here? Oil. Let's take a look at the currencies. So currencies, this is good right here. I was watching this last week. I believe this is a bottom happening here on the euro. See this right here? 1, 2, 3. This is known in technical analysis as a 1, 2, 3 bottom. For those of you who may be new, usually you want to buy above 1 point, 2 point, 3 point. You usually want to place a buy order above the 2 point and put your stop loss below the 3 point. But you could even buy if it pulls back, maybe like even halfway here. But one of the reasons I'm bullish the euro right now is because look at the positioning. They're not over. See, like you don't want to really be bullish um, when they're overbought bullish. Like here, you don't want to be bullish. 180,000 contracts long. Eventually, who's left to buy? You know what I mean? Buyers and sellers. Eventually, the buyers dry up, and who else is left to buy? No one. So they have to start selling. And when they start selling, if you go long when they're this long, guess what? You get stuck in the riptide, right? So now, so here they were long. I wouldn't be buying the euro here when they're this long, 180,000 contracts. But now they closed all those longs. They're neutral. They got nothing. So, in my opinion, this could be a good time to get bullish the euro. Um, but you don't just want to buy because it looks like they're no longer long. You want to wait for the market to actually prove to you that they're going to start hopefully closing those positions or getting long. And that's why the technical analysis helps so much because of this 1, 2, 3 bottom. Now I'm confident that not only are they no longer overcrowded long, but the market's showing signs of bottoming on the charts, plus they're neutral. So I think it's safe to get long if we get a pullback, maybe a little bit deeper, maybe like down. I mean, you could go long here, but I think it's better to go long like when you get a little bit of a pullback lower, possibly. Over on the pound, see here they were overcrowded short. And again, you want to use this COT report kind of like a contrarian report. If you see them really short, you want to go the other way. You want to go long. See how here they were really short? 96,000 contracts. Look what happened. They started closing those short positions and boom, market freaking rallied to the moon. Same thing here. They were overcrowded short. They're starting to they started closing them. Now they're getting short again. So again, it's not the holy grail, okay? But in trading, what do we need to be successful? An edge. If you could find an edge and put the odds in your favor, your risk reward jumps, right? And that's the whole point of trading. We want to find good trades where we get a better risk reward. I was watching this one here, the Swiss Franc. This is another one that they were really short, 44,000 contracts short. See how it catapulted like that? Um, but again, you don't just want to go long because you see them really overcrowded short. Wait for the market to maybe give you a signal that they're closing, maybe like a break above resistance. That's what I look for. Here they're short again, same thing. If the dollar is topping, and the last one is the yen. I was watching this one last week too. Here they're really short the yen. Look at this, 93,000 contracts short. But again, don't just go long because they're short. Wait for that break above resistance. Maybe like above here. If I see the market close above this level, now I'm willing to take a risk and go long the yen because they're proving to me that they might want to close those positions. So again, you got to look at history too. Like you see here, they were really short the yen, 180,000 contracts short, and look at that catapult. When they close those short positions, man, they get stuck. It's kind of painful actually. It's like they call it a short squeeze. You don't want to be on that side when it happens, trust me. Um, Finally, the dollar. The dollar, they're kind of starting to they're kind of neutral, 3,000 long, 5,000 long. They added a few longs, but you know, if crude oil drops, then and the stock market continues to rally, I think if the Fed starts talking about cutting interest rates, the dollar should be topping, most likely, but we'll have to wait and see. Last part here, the grains, not much really happening in the grain market this week, but we'll keep an eye on that. And finally, the bond market. The bonds, they were let's see here, the bonds, they were kind of short the bond market actually. Like they're really short the bonds. They've been short a long time bonds. But, again, it depends on what the Fed says. They're saying that they might not cut interest rates in the future. So I mean, if they cut interest rates, then usually the bond market would become bullish. But if they raise interest rates, that's going to be bearish for bonds. So I don't know. I mean, I'm watching to see what they do with the bond market. That'll be interesting to keep an eye on. And the last thing here I'll say is Bitcoin. Let's take a look at crypto real quick. So they're kind of getting long Bitcoin again. 2,500 contracts. But again, commitment of traders, contrarian report. When they are short Bitcoin, the market seems to rally. When they're long Bitcoin, the market seems to top. So just keep that in mind. All right. So in summary, me personally, my trades this week, I'm gonna just, I'm gonna watch for these pullback zones on the S&P. Might take a long position if we get a little pullback. And I did figure out now how to put these trades in trading views so you guys can see them in the future live when I do them. I could use this paper trading account here to show you guys. They give me like $100,000 here, so I can play some trades on this in the future so you guys can actually see what I'm talking about for those who are new. But yeah, I think for this week I'll be watching that. Pullbacks to the S&P 500 support zone, 6760-ish, about there. I think it's a good buy. Put a stop loss somewhere that's safe below. Same thing on the NASDAQ and the Russell. Again, I don't chase the market. I wait for it to move, to come back to me. Like, I'm not a chaser. When it rallies, I'm going to wait. Eventually, it pulls back. You just got to be patient. If you chase it and then it pulls back, you get stuck in a, losing trade. So what's the point of that? And the last thing I'll be watching is this yen. I'm going to keep an eye on this yen. If I see a break above resistance, I might look to get bullish the yen. So that's about it for this video. If you guys enjoyed the video, feel free to like, comment, put your like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, Never risk more than 1 to 2% of your account on any given trade, and that's how you will survive in this business in the long run. Good luck this week, guys.